Hello and welcome to the weekly market metrics. We are in week 49 of the year, and honestly, the unkept resolutions jokes are getting stale, and even thinking about it is stressing me out, so I'll skip it for the greater good. This week was indeed eventful. The Indian rupee hit a new low at 90 per dollar. The RBI cut the repo rate by 25 basis points to 5.25%, and SEBI made headlines with its major crackdown on unregistered trainers, another big development this week. SEBI has barred fin influencer Avadhoot Sathe from the markets and impounded a whopping 546 crores in illegal gains from his unregistered services. According to the 125-page order, his modus operandi was strikingly similar to what we discussed in a previous episode on the dark side of trading education in India. If you haven't seen that video yet, I'll link that in the description below. Towards the end of the week, on Friday around 2:15 p.m, a Cloudflare outage took down several websites including KiteWeb and Kite Mobile. So what do you do in a chaotic situation like that? You can still manage your orders using Kite Backup on WhatsApp. I'll link a video on how to do that in the description. Over to the markets, and it's time for our weekly dose of market metrics. Nifty hit a new all-time high this week but faced some selling pressure, bringing the index down 435 points or 1.65% from the peak. However, the markets regained the momentum after RBI cut the repo rate on Friday, ending almost close to where it was last week. So the pullback after hitting the all-time high might be over, and the market could head higher from here, or it could remain range-bound for the next week. Let's dive into the charts and see how the action unfolded and try to gauge where the markets might be headed in the coming week. As always, Nifty first. For the week, Nifty was slightly negative, giving up 17 points from the previous week's close. That's about 0.06%. It printed a red candle after 3 consecutive green weeks and ended at 26,186. During the week, Nifty slipped below 21,600, a key support level, and nearly tested 25,900 zone, which lines up with the lows of the past 3 weeks. Buyers have consistently stepped in around 25,900 and 25,800 levels. The weekly range came in at 435 points, about 1.65%, showing just how volatile this week was. Since I'm a glass half full person, I'm not reading this candle as a hanging man. Instead, I'm leaning towards a bullish trend continuation pattern. Key levels to watch: resistance at 26,000, and then all-time high at 26,325, and then support first at 26,100, and then deeper at 25,900 and 25,800 zone. On the daily time frame, similar to last week where Monday and Tuesday were negative, this week also opened with 3 down days even after making a new all-time high on Monday. Thursday finally offered some relief, and Friday, after the RBI rate cut announcement, the market resumed its upward move, gaining 153 points, that is 0.59%, to close at 26,186. It did find some resistance at 26,200 levels. On the daily chart, the resistance sits at 26,200 and then the all-time high of 26,325. Support remains at 26,000 and 25,900 zone. So the big question now is, will Nifty take out the all-time high next week, or will it mean revert from the highs? Honestly, your guess is as good as mine. Looking at Friday's candle, it does feel like an uptrend should sustain. Let's see how it actually plays out. On the hourly chart, the index kept chopping around 50 EMA, making it tough for trend followers to get a clear trend. Nifty started strong on Monday, dipped below the EMA on Tuesday, and as we've seen in the past, failed to stay below it, coming back above on Friday. As of Friday's close, Nifty is sitting roughly 90 points above the 50 EMA. The EMA itself is still around 26,100, almost unchanged from last week, since the index went nowhere on a closing basis through the week. However, overall hourly bias remains positive. Moving on to Nifty's overnight versus intraday action. Well, overnight moves were negative this week and intraday moves continue to stay muted. Nifty gapped up on Monday, but the gap down open on Tuesday and Wednesday wiped out those gains. For week 49 of 2025, Nifty logged 0.59% overnight returns, with intraday returns remaining muted at 0.06%. For the calendar year 2025, Nifty has gained 9.68% from overnight moves and 2.12% from intraday moves. A set of numbers that have basically gone nowhere for the past 6 weeks. Moving on to Bank Nifty on a weekly time frame, it was flat just like Nifty, gaining only 25 points, that is 0.04%. It hit a new all-time high on Monday at 60,114 before closing 337 points lower at 59,777. This week's range came in close to 1200 points, or about 2%, which is nearly the same as last week's 1250 point range. This is the 6th green weekly candle. Is it a hanging man on the Bank Nifty weekly chart? Well, I'll only know next week once we see the follow-through. Resistance is at the all-time high of 60,114 and support sits around this week's and last week's low near 59,000, followed by 58,600. Overall, Bank Nifty still looks bullish on the weekly chart, but as always, next week will reveal how strong the trend really is. On the daily time frame, Bank Nifty printed red candles on Monday and Tuesday, followed by green candles on Wednesday and Friday. Thursday formed a doji and indecision candle. Friday's strong green candles suggest the uptrend may continue, but the real confirmation will come only when we get a daily close above the all-time high. Resistance remains at the all-time high of 60,114 with support at 59,500 and then deeper levels of 58,900 and 58,700. The trend stays sideways to bullish unless the all-time high is taken out decisively. Looking at Bank Nifty on the hourly chart, it mirrors Nifty almost perfectly. It went above the 50 MA on Monday, dipped below it on Tuesday, chopped around midweek, then climbed back above on Friday. Overall, the bias stays sideways to bullish with price sitting about 343 points above the 50 MA. Moving on to Midcap Nifty on the weekly time frame, it hit a new all-time high again this week at 14,118, which now acts as the immediate resistance. The index lost 0.32% or 45 points for the week and closed at 13,998. The range for the week came in at 305 points, roughly 2.16%, which is lower than last week's range of 374 points, about 2.65%. Support sits at 13,850 and then 13,450, similar to last week, with resistance at new all-time high of 14,118. The sentiment remains sideways to bullish, very similar to Bank Nifty. On the daily chart, Midcap Nifty printed 2 green candles, 2 red candles and the doji on Thursday. It hit a new all-time high on Monday, just like Bank Nifty, but eventually closed 120 points or 0.85% below the high. Resistance remains the same as on the weekly time frame at 14,118, while support sits at 14,000 and then 13,800. Moving on to SENSEX on the weekly time frame, it finally made a all-time high again this week at 86,159. SENSEX remained flat, gaining just 6 points this week, close to 85,712, its highest weekly close ever for the second week in a row. This week marks 4 consecutive green weekly candles for SENSEX. Immediate resistance is at 86,159 with support at 85,300 and then at 84,600. On the daily time frame, SENSEX printed 3 straight red candles followed by 2 green candles, with Friday being the strongest, gaining 447 points or 0.52%. Resistance remains at 86,159 with support at 85,650 and then 84,500. Overall, the bias for SENSEX also stays sideways to bullish. Moving on to the rate of change, it was a pretty muted week across all indices, with week-to-day returns hovering around zero. All 4 indices are sitting close to their all-time highs, which you can see from the current drawdown percentage column being near zero. Talking about the year-to-date performance, Bank Nifty leads with 17.5%, Nifty follows at 10.75%, SENSEX sits at 9.69% and Midcap trails slightly at 8.45%. Moving to the directional bias, and just like the past 2 weeks, all 4 indices continue to hold a positive short-term and medium-term bias with price staying above the 21 EMA and 50 EMA on the daily time frame. Even if some indices appear sideways to bullish, the directional bias based on the slow and the fast EMAs is still clearly positive. Looking at the top performing sectors this week, IT is back after taking a breather last week, delivering a solid 3.47%. Metal and bank continue their strength from the previous week, while auto and services joined IT as the new entrants on the leaderboard. Talking about range, straddle prices and expiries, Friday volatility is back. The RBI's interest rate decision fueled the action, and the hour after 10 am was especially choppy. The market eventually moved higher, making Friday the highest range day of the week for Nifty 50, Bank Nifty and SENSEX. For mid-cap, however, the widest move of the day came on Wednesday. Nifty's 5-day average range has dipped to 182, down from last week's 210. The 10-day average range has inched up slightly from 185 to 197. Meanwhile, Nifty's 2DT straddle premium is sitting at just 153, down from 177 last week and 207 the week before that. Now, what's causing such low IVs? I really don't know. Maybe there's no fear of any future events or negative events or weekend events. I really don't know, but that's a real question. Talking about the Nifty expiry this week, the expiry day range came at around 157 points. It opened 87 points down. While the overall intraday action didn't feel extremely volatile, the entire range was actually established within the first hour. From there, the index moved up 159 points and then down 135 points and then finally bounced 100 points to close 143 points lower, finishing the day at 0.55%. SENSEX expiry on Thursday played out similarly with a 537 point range formed in the first hour itself. After that, the index dropped 470 points and surged 357 points in the last 2 hours. It eventually closed at positive 158 points on the day. The last hour was very volatile, as it happens on most expiries lately. Talking about India VIX, it fell another 11% this week after last week's 15% drop, closing at 10.3. Will it slip into single digits again? If it does, that would set a strong tone for the continued up move in the indexes. But bad news for option sellers or short vol players. Moving on to commodities this week. The commodity pack this week was led by natural gas, which was up by 6.75%. Next was copper at 5.34%, clocking in a YTD gain of 27.83%. Among the precious metals, silver did better than gold this week and moved up 3.84%, while gold was quite muted. On the energy side, crude oil, though positive, was more or less muted. Overall, the entire commodities pack that we track was in green, with copper and natural gas leading. In summary, the markets were fairly choppy this week. Indexes made all-time highs but gave up their strength on some selling pressure, only to regain the strength again on Friday. And India VIX, our volatility index, fell further, indicating calm. Commodities are all in green and dollar hits a new high at 90. So the first week of December was more of a reminder that we should never take the markets for granted. You never know what's in store, and yes, as the fabled saying goes, diversification is perhaps the only free lunch. Moving on to what to expect next week. Now, next week is the second week of December and we've got a full 5-day trading stretch with Fed interest rate decision coming in on 11th December, that is Thursday at 12:30 am IST, and may have minor effect on Friday open. Last week we asked if Friday volatility will be back, and it seems it has. Also, let's see if the market continues on its uptrend, making new highs, or chooses to consolidate a bit. But as always, I'm hoping against hope that we get a Santa rally in the coming weeks, but it's better to wait for the prices to confirm. So that's pretty much for this week, and yes, don't forget to subscribe to the channel. Until then, stay curious, stay steady, and have a great weekend. See you soon.